Hello everyone, and welcome back to this edition of the Think Tank. It is December 27th, 2017. I have a very important piece of information to share with you today, and I touched upon this in my prior Think Tank edition, and it was about cryptocurrencies. Now, we've seen cryptocurrencies go up an unbelievable amount. I mean, this is something unlike I have ever seen. There have been some high-flying stocks that have made spectacular returns, but we're talking about magnitudes of returns here, thousands and thousands of percent gains in such a short period of time. Now, you could just invest in cryptocurrencies, but it is very risky because it has to find a real valuation. A lot of it is speculative as opposed to the valuation of the commodity itself, meaning a means of exchange where people are using it as a currency. So it has to find an actual valuation. And right now, it could be that it's overvalued. And when I say it could be, because it can go even higher. We have seen a big pullback recently. This could be as a result of what went on in the futures market. We've seen that it went public in the futures market. Pretty short period of time. It's only been around a week. So that allowed maybe a lot of short sellers to come in, put pressure on the market. So we see another big downturn. Ironically, it's around 30% that it went down. How many times have we seen Bitcoin go down 30% and then it started to rocket back upward again? This indicates it may not be a bubble. When bubbles pop, you don't see them anymore. So that's pretty interesting to look at. So if you want to invest in it, it is risky. So I was thinking, and this is something very important. People don't talk about this, you see, because I am involved in the financials and investing. A lot of people in the Bitcoin space, they're techie people and they're excited, some of them are millennials, but you have to look at the financial aspect. You have to look at why it's going up. You have to look at ways to get in where you can protect yourself, be responsible, how much equity you're using, are you using margin or not. This is very important. And I have a very important piece of information to share with you. If you haven't seen this channel before or subscribed, just please bear with me because I got something really important to tell you that you're not going to hear anywhere else. This isn't a typical Bitcoin video and, that it's going to go up and all this. It's not about that. So bear with me. There was a time in American history during the 1840s we had the gold rush. A lot of people, prospectors, were very excited about it. They said, look, we can go to California, make a lot of money, and we can mine gold. And what happened? They went there. Now, did they make money? Few did. Most of them didn't. Now, who made the money in the gold rush? That's my question to you. It wasn't most of the prospectors. The people that really made money there, most of the people that made money, the money that was made, were the people selling the shovels, the people selling the equipment, the shopkeepers, the hotel owners, the real estate developers. They made the money because that's how the West was found. Before the gold rush, the West was pretty much uninhabited. It was gold that brought this move of people to the West, and that's how it became developed. Gold started the whole thing. Now, I was thinking to myself, I'm like, wait a minute. Gold gets mined, Bitcoin gets mined. What do you need to mine gold? You need a lot of equipment, you need heavy machinery, you need people that are skilled, that know how to operate the machinery, you need capital investment, and you also need some luck. You got to see if your mine actually has gold. And you also have to lease land and hope for the best. Now, wait a minute. That sounds familiar. Bitcoin. Bitcoin needs to be mined. You need expensive equipment, right? Now, where do you get that equipment from? You have to buy it. You got to spend a lot of money. It's expensive. And not only that, you have to join a pool because to mine Bitcoin yourself is almost impossible. You need so much equipment to do it. It's going to cost so much money. So what is done is that miners join a pool and then they share the proceeds when they're actually able to mine. Because I studied this technology of encryption. I mean, basically, it's a lot of numbers that need to be crunched. And you need a substantial amount of very high-end, cutting-edge type of chips and graphics cards in order to crunch these numbers and solve these problems. Now, what happens is, it doesn't happen. Like, the problems don't get solved, and then you have to keep on crunching the numbers. It's just like gold. You look for it, you don't find it. You look in other places. It's very similar. And I mean, it's just amazing. It's done in a digital way. It's a digital way of mining something. And then when it's found, you're awarded with a Bitcoin. And like gold, when you find it, you're awarded gold. So very similar. But there's only one way to do it. You've got to have the equipment. With gold, you need heavy machinery. You need backhoes. You need trucks. You need all kinds of mining equipment, ways to screen it. You need to drill for it. You need, all kinds of vehicles to go in these tunnels and these mines, and all kinds of equipment to give the miners. I mean, it's a lot of equipment that has to be purchased, and it's very expensive equipment. Same thing with cryptocurrencies. You got to purchase these rigs. I heard they can cost around $20,000, and that's what you need. And you also need a lot of electricity. It uses a tremendous amount of electricity. What's interesting also, the similarities, between Bitcoin and gold, is that as more Bitcoins are mined, it becomes harder and harder to find because Bitcoin is finite, just like gold. As more gold is being mined, it becomes harder to find. So what happens? You need more technologically advanced equipment, just like gold. If you look throughout the history of gold, you can see when they first started to mine gold, equipment was very primitive. Now it's state of the art. And now more gold can be mined, and be mined more efficiently and quicker. So it's similar to Bitcoin. As it gets more difficult to mine Bitcoin, you need more sophisticated equipment to do it. And you need lower energy costs. And as a result, more ways of obtaining energy are becoming more efficient, not just because of Bitcoin, because of world demand for power. So it's very, very similar. Now I'm thinking, how do I make money off this, right? Can I go out and buy Bitcoin? Yeah, I could do that. But it's risky. Like I said, it's very risky. I don't know where the price is going to be. I will say this. Don't listen to the alarmists. The alarmists generally have some snake oil to sell. The ones talking down on Bitcoin, saying it's a scam, it's going to go to zero, they compare it to tulips. These guys are either buffoons or they have some snake oil to sell you. Because if you even hear their arguments, you can see that they have lack of education on Bitcoin. They're not really addressing what it is and its value. And I want to get to that a little bit. I'm not going to talk about it entirely, but what really annoys me is when people say that Bitcoin has no value because you can't touch or feel it. These hard money type of people, the silver stackers, guys like that. So my answer to that is, and I don't understand, whenever you see these debates, Bitcoin versus gold, the whole thing, you never see where people are really talking about the potential of what Bitcoin can be. And that's smart contracts. They don't talk about that. You see, cryptocurrencies can enable something called a smart contract. So, listen, there you go. There's tangibility, right? You hire a lawyer, you got to pay him. That's a service, it's worth money. They take a lot of money to do contracts and things like that. Well, now you have smart contracts with cryptocurrencies that are backed by the blockchain technology, which can't be compromised, can't be taken down. There you go, right? And people are calling this Internet 2.0. Well, guess what? It may be more than 2.0 already, because the Internet, is something that's not centralized, and pretty much most people have access to it. And when it first came out, what was it? Email, dial-up internet, message boards, chat rooms. Look what it's turned into. We have video conferencing, streaming videos, social media. So we may be at I don't know, based on all the innovations from the internet, Bitcoin may be Internet 5.0, So there's been a lot of innovations. I disagree with the alarmists. It could go down, definitely. I mean, it has already. We've seen another 30% pullback already in Bitcoin. It can go down even more. Bitcoin itself, by the way, has a lot of problems. They do have to fix the scalability issue of it and the fees. Eventually, it's going to go that way because Bitcoin is a market-based currency. And eventually, if it does take a hit, if it goes down enough, the consensus will have to come together because money talks. That's the beauty of the free market. If Bitcoin takes a hit enough, if it goes down substantially enough because of the problems that it has, the consensus will be a lot stronger. You're going to see a lot more people coming together, even though it's decentralized, which, by the way, is a great thing, right? I mean, that's the appeal of it. So cryptocurrencies are here to stay. Will it replace conventional currencies? I don't think so. I think it has a role in a competing currency environment. I think it has a role because it can like some people say, I didn't say this, banking the unbanked, giving people access to the financial system that don't have it. Most people in the world don't have access to the financial system. When the scalability issues are fixed and the fees are fixed, well, of course, there's other cryptocurrencies. That's it, that's a game changer. So it's here to stay. It's not going to zero. But guess what? I'm going to show you how to make money, even if it does go to zero. This is an investment where it's safe enough where you can still possibly make money. Now, for the title there, right, I talked about how to make money in Bitcoin without investing in Bitcoin. Well, here it is. You ready? Invest in the equipment. Not just like gold. If you think the price of gold is going to go up substantially, now one of the ways it can only go up is if you invest in the equipment to mine it. So that means, possibly look at a company like Caterpillar. They make very heavy machinery, which you have to have. You have to have that machinery in order to mine gold. You need it. So that company should do well. That's only one component of it, but I'm just giving you an example. Now, as far as Bitcoin is concerned, and other cryptocurrencies, there are companies that make the equipment. Now, there are companies that make graphics cards. However, these graphics cards don't work with Bitcoin anymore. Bitcoin has become so difficult to mine. I think it's around halfway through to the 21 million, which is the last coin that can be mined. There's something called an ASIC chip, and you can look that up. ASIC. Now, through a painstaking amount of research, I did a lot of research here, it took me a lot of time, I found one company that is a leader in these chips that are required, and I use the word required, to make Bitcoin, which means they hold one of the keys to the future of Bitcoin and cryptocurrencies. Like I said, the graphics cards don't work with Bitcoin. They do work with other cryptocurrencies, but not with Bitcoin. And right now, by far, the leader of the cryptocurrencies, as far as size and liquidity, is Bitcoin. Now, there's one company that I know does it. I think there are other companies, but the company is called Taiwan Semiconductor Manufacturing. The stock symbol is TSM. They're located in Taiwan. Now, I did a lot of research on this company, and I was just fascinated and blown away by what I saw. First of all, you would think a company that deals with Bitcoin is some high-flying tech stock. It just came about, it's small, it's risky, overvalued, hyped, and it's anything but that. It's not like that at all. This is a mega cap company, almost $200 billion in market cap. So that's not large cap, that's mega cap. That's a very big company. Now, this company, not only are they huge, and not only do they have these ASIC chips that they manufacture, they actually suppliers. They supply companies like Apple and Qualcomm. Qualcomm is a supplier. They make chips for other companies, but TSM supplies Qualcomm. That's very interesting. So I did some more research. I noticed it has gone up this year. It had a very good year. It outperformed the Dow and the S&P. It's up over 35% already. Now, that's a substantial move, but it's not that big. Compared to what other tech stocks have done this year, that's not that big, which means it could still be early. Now, I was wondering, is this a short-term or a long-term investment? And I see it as both, because here's why. I did some research, and I just couldn't believe what I saw here. This company is doing very well. Take a look at this. I looked at their balance sheet. First of all, it's trading at only around 17 times earnings. Now, in a normal market atmosphere, that might not be that low, but in this current market, that's pretty good. A P around 17 is actually low. So that implies some value. Now let's take a look at this. If you look at their revenue, 2013 over 597 million, 2014 over 762 million, 2015 over 843 million, and 2016 over $947 million. So that indicates the company is growing despite its size. It continues to make money. It has increases in earnings. Now, revenue is important, but you also have to look at expenses. You have to look at debt. So you have to look at the net income, because a lot of companies can be overloaded with debt. So I looked at that. I saw the net income. Take a look at this. 2013, over 183 million. 2014, over 254 million. 2015, over 302 million. 2016, over $331 million. So every year they've had an increase in their income. Now here's something that's also important. If you look at the total revenue to net income ratio, you could see, compared to other companies, that they're doing better, even in the industry itself. So that shows that the ratio of the difference between their revenue and net income, as far as the increases, is better and outperforms not only a lot of other companies, but companies within their industry. So you see a company that's making a lot of money, you see a company that has substantial increases in their revenue, and it just shows a company that's doing quite well. And then they're also in a very strong sector. That's also important. And then you have a low PE in comparison to other companies. And to add to that, I have to mention this, the company is paying a nearly 3% dividend. That's very good for a company this size, especially in a tech sector where you don't see generally very high dividends. I mean, that's a pretty good dividend. So even if your timing is off, you get paid to hold it. You know, like I said, this is a major player in this sector. Not only are they a major supplier of semiconductors, they actually supply suppliers. So they are a base company. They're a company that other companies do business with. As a manufacturer, companies that are in the retail business of the tech sector, like Apple, I mean, this looks like a really good opportunity. Now, as far as looking at this as a potential investment, I mean, I was looking at the price today, and there is a pullback. So it might be an opportunity here to get in. It did pull back somewhat. It looks like it's consolidating. I'm looking at the overall industry. The companies in the semiconductor space are doing very well. Like I said, if you look at other companies, you know, what they've done this year, you know, 35% is a nice move, but I mean, there's companies that have done a lot better. And based on the PE ratio and, you know, the amount of money the company is doing and its space in this particular industry, you know, its role, I think this company has a substantial amount of potential. So I would look at a point to get in, I would say at around 39. It's at around that price now. So if you want to get in, you can decide if you want to get in at 39 or better. That's where the stock price is trading at right now. And I see this company potentially as a good short or long-term investment. Now, if you're very bullish about cryptocurrencies, this is something that you can consider holding for a while. Now, it is a very large company, so, you know, it's not like you're investing in a very small startup here. This is a mega cap company. So for it to go up substantially, it can happen. But it's also unlikely that it's going to go down substantially. I think this is something to hold on to long term. And to keep in mind, like I said, even if cryptocurrencies go to zero, which I don't think is going to happen, they're going to be around. Like I said, they supply Apple, they supply Qualcomm. They're very much embedded. They're a leader. They are a leader in the semiconductor space, which is here to stay. So I think it's a really, really interesting investment. So recently, 3 stock picks, 3 wins. Now keep in mind, this is the stock market. There is risk involved. So do your due diligence, do some research, look into it, and based on your research, if this is something you want to decide to invest in, then that's a decision that you can make. So this is something new to look at. I did post some links in the video for you to look at some other videos I've done on some stocks that I've picked and how they've performed, so you can take a look at those as well. If you haven't subscribed yet, please do, to find out what's coming up next. I have a lot more things coming up pretty soon. There's a lot of things going on in the markets right now. I appreciate you watching. Please subscribe. Please like up this video and let me know what you think. Feel free to leave comments below. And thank you for tuning in.